Good afternoon, everyone, and a very warm welcome to the third in our series of webinars hosted by the Sasfin Digital Council. I'm Elisheba Gilbert. I'm Group Head of Marketing at Sasfin. Yesterday, I had the privilege of spending some time with our panelists, and I can tell you that you're in for a treat today. So firstly, I would like to welcome Arif Ismail. Arif is Head of FinTech at the South African Reserve Bank. He is also the chair of the Intergovernmental FinTech Working Group. This group launched an innovation hub in April in South Africa. Arif will be talking to us about how central banks are looking at technology, and he will share some predictions of what he thinks may happen over the next few years. Next up, we have Toby Shapshak, who is Editor-in-Chief and Publisher of Stuff, a contributor to Forbes and a columnist for the Financial Mail. His TED Talk on innovation in Africa has had well over 1.5 million views, and he has written for CNN and The Guardian in London. He was named in GQ's top 30 men in media and the Mail and Guardian newspaper's 300 influential young South Africans. Hidan Orenchik is the lead sales and business developer for Africa at AxFlyer, which is a global leader in mobile attribution. Built around privacy by design, AxFlyer takes a customer-centric approach to help 12,000 brands and over 6,000 technology partners make better business decisions every day. Idan has a vast amount of knowledge and experience in developing new markets and sales channels in Africa, working with large enterprises as well as with early-stage startups. You see, I told you you were in for a treat. And finally, both contributor and moderator for the webinar today, Arthur Goldstack. Arthur is founder of Worldwide Works, SA's leading independent technology market research company. He is author of 18 books, editor-in-chief of gadget.co.za, and he chairs Sasfin's Digital Council. This council provides guidance and insights on fintech trends and provides a platform for discussion and debate regarding the digital future. So I'm not going to spend any more time talking, and I'm going to hand straight over to Arthur, who will take us away for today's discussion. Thank you and enjoy.
Thanks so much, Elisheba. Thank you to the panelists for joining us, and thank you to the attendees, our audience out there. We can't see you, but we can feel you out there. And we also going to invite you to put questions in the chat window, or if there's a Q&A panel open to you, and Elisheba will moderate those questions, pass them on to me, and then I'll field them to the panel towards the end of the discussion. But I'm going to start off just giving you a sense of the context that we're discussing today, and that is the acceleration of digitalization. So we're all aware that we're in a phase of digitalization. It's what I described in our previous webinar as not a digital transformation, but rather an awakening to digital transformation, and therefore it's a digital awakening that we're all experiencing as we are forced to embrace the digital environment, but also as we become aware of just how heavily we are embedded in this digital environment. Many of us didn't realize the extent to which we were already operating in a remote fashion. It's just forced us to operate almost entirely in a remote fashion. And that has changed the worlds of work, of education, of health, various other sectors as well. We only wish it would change the world of public service, but that will come as well in the longer term. But what we're now seeing is as the COVID-19 crisis deepens and as it is prolonged, which was always predicted, but we always hoped that we would come out of it sooner, we are seeing an acceleration of dependence on digital platforms. And we are seeing the existing digital platforms all intensifying their efforts, not just to win customers, but to improve the customer experience. And that in turn has resulted in a sense that everything is speeding up. So it's no longer a case of seeing this freight train out there rushing forward, but all of us being on the freight train and wondering how to make ourselves more comfortable on it, but also how to manage our lives while we're on board this onrushing freight train. So with that metaphor in mind, I'm going to ask each of the panelists first to introduce themselves in terms of their perspective on this acceleration of digitalization. And after that, I'll go into very specific questions that pertain to each of the areas. I'm going to start with Arif. Arif, can you give us your perspective from, I guess, from a central bank point of view?
Excellent. Arthur, I think when we were chatting yesterday, you kind of inspired and encouraged that we should look into the crystal ball, so to speak, and peek into what may be coming. And I'd like to kind of take that angle on it and peek into the crystal ball. I'll cover this angle, of course, from a central banking perspective, and cover, if I may, a few possible predictions over the few years that we see, maybe the next 3 to 5 years. I'm not sure how radical these predictions might be, Arthur, but I've picked up some of the trends we're seeing as central banks. And to get these predictions, I'll cover 2 things very quickly for us. First, what are the major technologies that we're following as central banks? And secondly, why could there be interest from a central banking perspective on even following some of these emerging technologies? Of course, Charles Schemmel rightly will remind us that how central banks think about these particular technologies is dependent on what kind of lens we're using. You know, that of a regulator and supervisor, or even a catalyst. And of course, the one that sometimes we tend to forget about is the central bank even as a service provider, like in providing cash or high-value payments infrastructure. So here goes. We recently reached out to about 11 central banks from around the world, from the Far East, Europe, North America, South America, and so on. The 4 or 5 technologies, of course, this is not like an exclusive list, that they are following closely, either for their own use or to understand its potential in the market, are really the following. It's open APIs, big data and related advanced analytics tools, cloud computing, distributed ledgers, and the one that I've kind of bucketed as I thought of Charles Schemmel, I called it e-platforms. And this could be any platform, any electronic platform that allows for financial services to be provided, such as, again, e-commerce platforms, peer-to-peer lending or insurance platforms, etc. You know, my quick sense is that open APIs are probably closely related to the potential for open data and open finance efforts, and may play a key role in how financial data sets are shared with central banks for reporting purposes, or for data to be shared even between financial institutions and fintech firms and vice versa. Big data, of course, is about the sheer volume and availability and access to both structured and unstructured data. I'm sure we've heard now many times this extraordinary fact that 90% of the world's data has been created in just the last 5 years. We now produce, just in 2 days, the same amount of data it took us from the dawn of civilization until 2003 to generate. For me, what's even more intriguing is that the processing capability of this data is amazing through tools, again, such as cloud computing, machine learning, and deep neural networks. Very, very large quantities of data can be mined, and patterns never imagined before can emerge. If I turn quickly to cloud computing, it's of course an important technology, especially giving capability to store and access very large data sets. But we also hear from the likes of Ping An and Tencent in China how cloud is vital to provide scalability and the speed that's required, of course, for processing millions of transactions in seconds. And then lastly, on distributed ledgers, they have propelled, as colleagues would have heard, trials or experiments with various tokens, such as privately issued tokens like stable coins, and now even central banks thinking of digital cash in what's typically now called a central bank digital currency or so. So the first prediction, Arthur, is that what would propel innovation going forward, in my mind, is the successful exploitation of combining the various emerging technologies such as blockchains, AI, smart contracts, big data, and the Internet of Things. Those who can do what I call this interconnecting, the mixing of these techs, will see emergence of never seen before innovations, and that will propel what you described as the train, or more like the bullet train, for what's about to come. Let me then, turn very quickly to how central banks are thinking about these technologies. First, as regulators and supervisors, one trend we've picked up on is the concern of understanding the risks posed by some of the emerging technologies like machine learning, decision-making processes, cloud computing dependencies on third parties, or even whether you're reaching legal finality when you're using distributed ledger technologies for processing tokens. However, my second prediction is less about the risk associated with these technologies, but more about the increasing likelihood that these technologies will actually be adopted by supervisors to improve on their supervisory processes, an emerging phenomenon called subtech. Speaking to the Bank of Italy, recently they shared with us how by using non-traditional data like social media data, they have advanced their abilities to detect money laundering issues. And a good example coming from our own continent, from the Central Bank of Rwanda, is that rather than using data collected through spreadsheets, they use open APIs to collect data in near real time, sometimes every 15 minutes. So my second prediction is that subtech will accelerate the adoption of technology for both regulatory reporting and supervisory processes. We will see much more about machine-readable regulations, virtual chatbots, and big data sharing initiatives to improve reporting and supervisory practices. If I quickly then turn attention to the role of catalysts, my sense is that, as has been mentioned, that for those regulators that leverage things like sandboxes, etc., we will see a catalyzing of this as they explore topics like index insurance, stablecoin payments, open banking, and crowdfunding. So my third prediction is that for those domains where regulators create these structures, there's going to be a large adoption of technologies that I mentioned, an increase in financial services. Last but not least, and I'll quickly conclude, is that the role of central banks in providing services such as cash or even infrastructure for high-value payments. What we have emerging in numerous jurisdictions are central banks trialing emerging technologies to enable digital tokens or digital cash. Sweden, as you've probably heard, are busy with their e-krona, and China is busy with what the electronic payment. My final prediction is that we will see the emergence of a tokenized economy. However, there will be competition for both privately issued tokens, such as Libra or utility settlement coins, and central bank tokens, either for wholesale or retail payments. So those are my 4 predictions, Arthur. Innovators who exploit the emerging technologies by combining the offerings will produce never-seen-before innovations. Imagine the benefit of real-time pricing as an example to the Internet of Things as you apply smart contracts initiating these transactions under particular conditions. Second one is that the regulatory perspective will see the shift to subtech in a more accelerated manner. The third one is those jurisdictions that have put their heads in the sandboxes rather than in the sand will see greater adoption of new financial services. And lastly, the token wars between private and public tokens will be heightened. That's kind of what I have in my crystal ball, Arthur. I know that's a mouthful, but I'll pause there. Thanks.
Thanks, Harif. That's a lot to chew on, and fresh insights as well, which is always a pleasure to hear. So while we absorb that and digest it, I guess, I'm going to ask Edan to give his perspective, and hopefully from a global perspective, but also knowing that your organization really is able to look under the skin of the world of apps.
Yeah, so thank you, Arthur, and thank you, Sasfin, for inviting me to this event, the first event that I'm having with you. Just about these events, I believe that these kind of virtual events at this time are super important. We are all experiencing across different places. I'm located in Israel. We're all experiencing social distancing. But on a personal level, I'm participating in different kind of events and virtual events, and I've been speaking with more people in the past 3 months than I've been spoken with in the past year. So thanks again. I work for a company called AppsFlyer, and we indeed meet companies that wish to promote their apps. Now, as you know, Arthur, there are 2.5 million apps in the store. So it's clearly not enough just to have a great app, upload it to the store, and wish that someone would download it. And these days, you have to be really creative and run marketing campaigns to prompt users to download your app and then to also engage with it. And what we do as AppsFlyer, we provide marketeers a suite of tools for measurements and for analytics. And basically letting them understand which channel that they're marketing with is providing them with the best users and then act accordingly. So saying that, we're in the middle of the mobile ecosystem. And when I look at the trends of the mobile ecosystem, it's clear. Companies understand that digitalization of their business is crucial and that apps are necessary to engage with users and provide them with a great experience. Arif just mentioned that companies are pushing for digital payments. So in 2018, a McKinsey Global Banking report said that although cash is still king in Africa, the push to digital payment has begun, and we see it even evolving more today. We have a report at AppsFlyer that we published in the beginning of the COVID-19 on the impact of COVID-19 on app installs and marketing budgets. Now, we updated it regularly, hopefully not for long, and it's based on 10 billion installs. And what do we see there? We see that, in average, during lockdown, companies worldwide ran an aggressive user acquisition campaign, meaning they ran campaigns to acquire new users to their app or to the digital platform. Now, the ad spend was increased in 20%, and in gaming apps, even in 35%. Now, that's companies spending on UA, on user acquisition. And we see that also the revenue that generated from apps during the lockdown was 45%, and it's not showing any signs of recessions. So it's impressive also to look at non-gaming apps, for example, where we see the revenue almost growing every week and reaching 50% revenue since mid-March. So to recap, I can say that the digital trend started a long time ago, and it's continuously growing. And this horrible pandemic hurt many people, companies, and startups, but I think it had an effect on the acceleration and implementation of many of the digital processes, especially with banks, that would have taken much longer than they do these days. I'll speak later about which verticals have been affected more or less, and I'll be happy to share also my crystal ball, as Arif mentioned.
Great, thank you, Idan. We now turn to a man that can be described as the Howard Stern of tech journalism, or the father of Max, or simply the sharpest mind in tech journalism and in terms of perspectives of Africa's technology future. Toby Shapshak, please give us your perspective on what is coming.
The part of me that just wants to say nothing has changed, actually. What has changed is that it's all happening so much faster and so much more aggressively. But I'm not going to be Dufka and say nothing's changed, because everything's changed, hasn't it? And I think the phrases people have used have been really appropriate. Arthur, the awakening, the as much as everyone says the new normal and the future of work, we don't really know what that means. But I think what we've seen is a very rapid transition from one way of doing things to another way of doing things, whatever that is. And I think that the change has just happened in an incredibly fast way. So my day job is printing a piece of paper in a digital age, right? I produce a magazine, but the thing that I think has kind of summed up how quickly this transition has happened was the New York Times did an interview with a doctor a GP in London, who was talking about how very quickly telemedicine has become such a big issue around the world, and how suddenly telemedicine is so huge. And he said what we've seen is 10 years worth of transition and transformation in the space of a week. And I think that really sums up so many industries, right? Like how now all of us are very comfortable working from home. I had to move my laptop so you can see how messy my open cupboards were. It's a fundamental shift, and yet for some people it isn't. Arthur and I, for one, have been joking that this is how we've always worked. Even though both of us have companies and staff and offices, I'm so used to working from home. So many people who work for overseas companies, if you are the one or two people from an American or an Asian company based here, generally you don't have offices, you work from home. There's nothing different to the remote working. All that's fundamentally changes. It's how we're all working now, and it's how we're all thinking now. And the real changes are going to be the ones that have already been tapping at our door. I don't want to be a naysayer and say there's no big major trend. The fourth industrial revolution didn't start last Thursday. It probably started the Thursday before that. But it's a catch-all phrase to describe a whole range of new technologies and a whole range of new ways of doing things. One of which is really the strangeness of talking to a video camera and seeing yourself and seeing how bad your hair is today. So I kind of want to say that we're doing everything we should have been doing, but now we have to do it, and we have to do it faster. Arthur always had this lovely statistic about e-commerce behavior, and he said it would take 5 years from when people began interacting with the internet and became familiar with the methods and the patterns and the memes and the metaphor for e-commerce before they started doing online things like banking or shopping. I think this COVID crisis has accelerated it. Click and collect, as I see, is just booming everywhere. Online deliveries, the courier firms I've been dealing with extensively, they're all adapting to it. People are just suddenly doing all the things we predicted they would do because they have no choice, because this is the state of the world. And let's be clear, this is a middle-class phenomenon. This is not what everybody's experience of this crisis has been. A lot of people live in crowded environments in a township where social distancing is impossible and people simply don't have savings to fall back on. So it is very much a middle-class phenomenon, but it does show, because this middle class is, to my mind, the economic engine of any economy. Middle class people take out mortgages, they start businesses, they buy cars, they take 2-year cell phone contracts on credit, that kind of thing. That is what keeps the economy going. But it's a fundamental change to so many people's ways of doing business. I know I'm supposed to talk about technology, but I think the technology is there. I think the technology exists. To hear Arif speaking the way he does about the thinking at the central bank is deeply heartening to me, that they are visionaries to see how all of this new technology is coming and how it's going to change things. But the problem that we're going to experience is not technology. It's an error between keyboard and chair, and that is, us human beings are creatures of habit, and we don't necessarily want to change our habits, which is why if you lose your car keys, everybody goes to look in the street where there's a street light, not in the street where they dropped their car keys. Kind of feels like the whole of South Africa right now is that street without the street light, doesn't it?
Thanks, Toby. Also, a great perspective to give us a sense of how we really don't know where the future lies and what the future will look like. We're looking at this massively changing world, everyone looking to you to provide new financial services technology, or at least to allow for it. But the challenge to you isn't the technology, it's the policy underlying it. You've got to be so agile because you've got to keep up with this rapid shift and these rapid changes. How do you remain agile as a policymaker, and what is the role of agility in the central bank?
That's a great question, Arthur. So I think in terms of being agile, especially for emerging innovations from the market, I kind of pointed to the innovation hub that I said was in South Africa, and what it has is 3 components to it. The first one is just what we call a regulatory guidance unit, and what it does is it connects the innovators to the regulators. So to make it very practical, if you've got a question or a query on your particular innovation, the usual process is that you would have to send an email and hope that someone responds to you over a number of months. Now you have the opportunity of sending one request, and all 6 regulators, main regulators in South Africa, get to see that request and respond within a very short period of time. So that's the first part in terms of being very agile and flexible in terms of responding. The second one is quite fascinating. It's typically what other jurisdictions have implemented called a regulatory sandbox. and it's where innovators can be allowed, to even put in live transactions, of course, within a set of boundary conditions, number of customers, number of transactions, etc. And we, instead of waiting for law or policy, to kind of be developed, we can trial together with the innovator on an ongoing basis, for a period of time, having a look at that innovation in flight and trying to understand what the policy and regulatory implications are. And the last one is, I like to call it the policy accelerator. So again, as you know, Arthur, policy making and law making and so on takes a long while to kind of put in place. But this accelerator allows for the 6 regulators to come together and develop almost agile, fast, smart perspectives, for the kind of innovations that are emerging. And that's just one way of how, authorities and regulators, etc., are attempting, at least, with great humility, to be agile. As you can imagine, it's not always easy. Innovation tends to always be ahead of, I think the last thought was just how innovation tends to always be ahead of regulation. And the key thing for us now is how do we keep in step with it rather than, being too far behind. But those are some of the things that we're doing to stay as agile as we can, from a policy-making perspective.
Thanks, Arif. Fascinating to hear humility associated with central banks, but then as much of a seeming oxymoron as the idea of agility with central banks. But if both of those are being embraced, then we can certainly see everyone moving into the future almost in lockstep. But everyone is a very relative term depending on industry sectors. So Idan, can you give us a sense of which sectors and which verticals are the most affected? Which ones you see growing more rapidly and the like?
Sure, Arthur. So we work with a very diverse portfolio of apps. We work with companies such as Amazon, eBay, Booking.com, Goldman Sachs, MTN, HBO, TikTok, Visa, KFC, Waze, Tencent, and more. And what I'm trying to say here that we see a very holistic and wide picture of the mobile space. And some verticals and apps, as we all know, were hurt badly. Apps such as Airbnb, Booking.com, AirAsia, Trivago, and many more are experiencing today major challenges. But today here, I'd like to speak about the one that we see rising. And I'm relating to what Arif said. Agility is a key here. And the verticals that we see rising are mainly gaming, shopping, finance, and as Toby mentioned, lifestyle. We see in these app revenues climbing. Now, let's take the finance vertical, for example. And I'm relating here to what Jeremy wrote on the chat. Here on the chat, he wrote that he does not believe that cash is a king in Africa, and I'm totally relating to that. And the quote that I gave from McKinsey is from 2018. And today, we see a very fast-growing vertical of finance with more and more e-wallets, digital and mobile-first banks, and a lot of different fintechs. And it didn't start today. Sub-Saharan Africa is responsible for over 45% of the total mobile money activity in the world. And this is with over 800 million people with no access to mobile internet. So the numbers are huge. And what we do see since the start of the pandemic is that traditional banks are investing more in their apps because they realize that mobile is today the primary screen. People are using the mobile to perform any kind of banking activities today. And we actually saw the finance revenue surge 75% since the lockdown started. Now, it's mainly driven by high usage of financial services, investment apps, and people rely more and more on digital money, as we said in the start, and on portfolio management. Now, Toby mentioned yoga. And yes, lifestyle apps almost doubled since mid-March. and it's growing a further 35% only in this past month. Now, these apps were able to maintain an increased usage following the jump that they experienced during the lockdown. Another vertical that we see rising is e-com. And again, for the same reason, people are at home, they're less shopping outside, and the mobile screen is primary. So shopping apps had to adapt quickly to the new reality, be agile, as we said, and to become a major player in the way that people performing their shopping. There's other apps that we see rising, such as gaming, and it's clear people are at home downloading more games. There's more game publishers, and those are the major verticals that we see rising these days.
Thanks, Idan. I'm going to give you a quick insight into what you just said in terms of how global corporations are performing. And I'll give you two examples. The one is Intel, which is $250 billion business and almost a byword for the building of chips and processors that power the digital revolution, or that used to power it. In the past week, it was overtaken in market capitalization by a little company that makes chips or processors for gaming devices, and that's a company called NVIDIA. And NVIDIA was known only for its graphics processors previously, but in the last few months, it's been recognized that those processors are ideal for processing artificial intelligence requirements in computers. And suddenly, from not quite nowhere, but certainly far behind Intel, probably half the market cap of Intel, this past week, NVIDIA overtook Intel in market capitalization. And that's an indication not only of the power of games in this era, but also how usage of technology by different verticals completely transforms this whole environment. Jessica Wilkinson of Tide Banking, a fully digital business bank based in London. Great to see you attending the event, Jessica. She asks, what do you think the biggest lessons are that existing digital challenger banks should learn from digital transformation in Africa? Arif, do you want to give us some sense of how you see that?
Yeah, absolutely. I think it's a great question again. I think the challenge again is, one of the comments I saw on the sidebar was that how do we bring people who don't have access to these technologies, how do we bring them to the fore? So I think the big challenge that we have, even as digital challenger banks come into the fore, it's how do you get a mass of the market? If you think of South Africa as an example, how do you get a mass of the market, into using digital infrastructure, especially where it matters for them? So let me use an example. I think of family members who receive social grant payments, and often I think, well, you've got a very sophisticated EMV chip in your hand with biometric capabilities. Why don't you just tap and go wherever you need to transact? What holds you back from doing that? And the answers that I get is, well, come and have a look at where we live and the kind of digital infrastructure that's available. So if I can't use my card at a spaza shop, you can give me the instrument, which is really sophisticated, linked to my bank account. But if I can't use it at the places where it means the most to me, I will revert to traditional methods like cash, etc. So I think for challenger banks, the issue is really about reach, and about reach to the masses and how you do that. And that's the big challenge that we have, I think, in our jurisdiction at the moment. So the advice would be, or the thought would be, not even advice, the thought would be, I think in looking at where people really battle to get access into digital infrastructure, we have to start asking some really tough questions. Is it the technology? Is it the economic model? Is it social dynamics, behavioral dynamics? What is it that holds us back from extending the digital infrastructure and merging the digital divide? I don't think there's a silver bullet for it. I think it's a mixture of all of those factors, Arthur.
But I'm going to ask Idan firstly to follow up on Arif's comments, but also in response to two questions that are very closely related, where firstly, Andy Clay says, why can't we move rapidly to a cashless society, especially for all government payments to eliminate crime? And then Jeremy Kirsch says that cell technology in Africa has adapted incredibly quickly, as has smartphone-based payments and commerce. And both of those comments speak to the proliferation of apps that make a cashless society possible. How are you seeing that, Idan? And in particular, how does it differ across different income groups? Because it's all very well to say that we can all use apps, but there's a big chunk of the market that is still using basic phones.
Yes, so these are two good questions or two good comments. The digital transformation to e-wallet and digital money is happening, and it started to happen a while ago. We see in Brazil, for example, that the banks are competing. The big traditional banks that are there for many years are competing with early stage small startups, very agile, very tech savvy, very mobile oriented, and we see it also in Africa. I mean, there are companies in Africa that, especially in South Africa, that are developing great technology. But as I mentioned, it's not enough to develop a great technology or a great app that can maybe pay your bills, or you can do different kind of money transfers. There's 2.5 million apps in the store. You have to be able to market it. And Toby mentioned earlier that people will move to digital marketing, and yes, it's happening because, imagine you're let's go with a different example at all. Imagine you're company selling diapers, and you had the choice of choosing either a digital campaign targeting the right audiences, an ability to measure it afterwards and be able to get many kind of analytics on it, versus a broad TV campaign at 8:30 in the evening, which you basically spray and pray. What would you choose? So you would go with a digital marketing, and people are investing more in their apps and getting more data and analytics to be able to grow with it. Now, if you're asking me about the future, I think that many of the changes that were made today due to the COVID-19 and were made fast will stay with us also post the pandemic. And companies that have implemented a digital marketing strategy and an app marketing strategy will keep doing so as long as they see the value in it. And people will keep innovating. Yeah, I'm sure we will see also great new things that we didn't think about. And about agility and innovation, if I can share with you a nice local story. It's not finance related, but it's e-com. It's a story about early stage startup, or a startup called Bottles App, the Bottles App in South Africa. It's a company with great people and an initial model of a quick delivery of alcohol. We met them a few times. The last time I've been just before the COVID-19 started in Johannesburg and Cape Town. We did a tour with our clients. And what happened in South Africa when the pandemic started? First thing, alcohol was forbidden. So the team was facing a major challenge. Yeah, they had to choose. They had a great app. They were ready logistically, but they could not sell their product. So they partnered up with Pick n Pay, and they provide now grocery delivery through the app. And I see it as a great example for agility and to adopt to a new business model. And we all can imagine how challenging it can be to add a retailer inventory completely to your app and to implement such a change so quickly and dramatically. And it gives me to a quote that I like by Charles Darwin. And he said, "It's not the strongest of the species that survive, nor it's the most intelligent that survive. It's the one that is most adaptable to change."
We've reached the end of our hour. Regrettably, there's still so many questions people want to ask. But just on a closing note, I want to mention one of the one of the audience, Fraser McHenry, says in 2004, he was chatting with Toby about virtual fitness training. And it shows how long the technology has been capable. Other questions are around how soon blockchain will go mainstream and what the Reserve Bank has planned there. I suggest you look at the Reserve Bank's website and its documents around Project Ikoko, which gives you a good sense of how much work is being done in that environment in terms of exploring the possibilities of blockchain. Regrettably, we don't have time for more questions. The Lords of ESCOM determined at 1:30 that 100 people should drop off this meeting, because that's exactly what happened as load shedding kicked in. But we look forward to chatting with you all again in future webinars and future events of the Sasfin Digital Council. Thank you so much for joining us. Have a great day, and may you all have power.